Okay, good morning, good afternoon, good evening from wherever you're watching me from. Welcome back to the channel, everybody. In today's video, I'll be sharing with you one of my trades I took on Friday. This is actually going to be a very short video because I just want to explain to you how I trade and how I enter a setup, where I take my risk, where I take my profits, and the setup I use to enter. Okay, so I want to show you that you also be able to analyze the market and trade for some profit. Okay, so I know you can't wait to see that, so let's just get started as soon as possible. So as you can see, I trade with MT5 and TradingView. I have different accounts with different brokers because I don't want to put all my eggs in one basket. Guys, you have to be wise. It's very good to have different portfolios with different brokers. Okay, so I trade on MT5 and I trade on TradingView, and it's not because of these two platforms, but because based on the strategy I trade and the account I use. So this particular account I use to trade, I am trading it on the MT5 platform. Okay, so I'm just mentioning it here because some people also use TradingView, and when they come to the MT5 environment, they get confused, they don't know what to do. So I'm just telling you that whatever you're going to find here is the same thing on TradingView. Charts are always chart. Okay, what's going to be the difference will be the tools you're going to see, but aside that, charts are always charts, candlesticks are always candlesticks. Okay, so if you are from TradingView and you have been trading with TradingView and you see MT5, don't be shocked. Okay, it's the same thing. So I trade with MT5 and I trade with TradingView. You can also trade with MT4, the older version of this MT5. So this is what I trade, and this particular account is what I'm going to show you, where I did the trade, how I entered, and how you can also analyze the market trade the same way. I personally trade 5 strategies for my Forex trades. I trade all the currency pairs, so I use 5 strategies to trade all the currency pairs, and I trade 3 strategies for indices. So I just trade Forex and I trade indices. That's all. It's very good and wise to specialize. Okay, when I was new, I was just trading everything. I trade crypto, I trade currencies, I trade stocks, I trade indices, and today here and tomorrow there. Then I realized that I have to specialize in one thing. So I specialized in Forex and I mastered Forex. When I became profitable, I had to add up indices. So I trade indices for about 4 years now. Yes, 3 to 4 years now. And I make profits every day to feed myself and my family. So open your eyes, pay attention to this video. I'm going to teach you the entry techniques you're going to use to be able to trade the same way and to make some profit. If only you're going to follow the rules I'm going to teach you, okay? So before we begin, let me show you the basics of this particular strategy I trade. I've been teaching here on YouTube just for you guys to also be able to trade. This is called breakout continuation pattern. Okay, breakout continuation trade strategy, breakout continuation trade strategy. And before you can trade this trade, you must make sure that the market is trending. You must find a trending market. And what's a trending market? We learned in one of my videos that market tends to trend in various ways, right? Then the traditional way market trend that we know is mix higher high, lower low, higher high, lower low, higher high, and lower low, or maybe mix higher high again. This is the traditional way market trend, right? I also explained to you one of my videos that market do not trend only this way. Okay, sometimes market also trend, it makes higher high, retrace, make some consolidation, and break out of the consolidation, retreat back to the zone, and now continue the trend. So guys, you see, market does not only trend this way, but market also trends in this way too. Okay, this is the only version you see on YouTube, but this is also what I'm teaching you here. So the breakout continuation pattern is a strategy that we trade when there is a breakout from this consolidation area. Can you see? When you see a consolidation area, then we trade. Okay, so let me explain one more. Before you can trade this breakout continuation pattern, you must first identify a trending market. What is a trending market? A trending market is a market which has what? Which is moving with higher highs and lower lows, right? Traditional trending market. That's how you must identify. So either the market is on an uptrend or the market is on a downtrend. Okay? This is a trending market. You must first identify a trending market. Okay? A trending market. That's what you must first identify. That's the first rule. And I've also told you that market do not trend just this way. Market has different ways of trending, right? Like if it's on a downtrend. So let's see downtrend, trending, consolidate, and continue. Oh guys, it's very difficult to draw with the mouse. So let's just continue. Okay, let's continue. Okay, so identify trending markets. The next one you have to identify is that make sure that the market is broken out of the consolidation area. So let's see, you are making higher highs and consolidation, and then you draw your lines here. When the market breaks out of the consolidation area, we are waiting for the market to retrace back to the zone, and then when we get a confirmation here, we take the market up. Guys, you understand? We wait for the market to come back to the zone, and we get a confirmation here before we take the market up. That is the breakout continuation strategy I've been teaching here. Those are the rules. Identify a trending market, set for consolidated area, set for breakout, and when there's a breakout, now you can take your trade. So how do you identify a trend? There are various ways you can use to identify a trend, using a moving average or using a trend line. Okay, drawing a trend line. These are various ways you can identify a trend. But sometimes trend lines are very difficult to draw. If you're not an expert, you have not been trading for some time, you end up drawing trend line because when the market has already formed, it's easier to connect the dots, right? As everybody teaches on YouTube, as if it's easy, because the market has already formed, so you have hindsight ideas. Okay, so you can just draw the lines, but in reality, in real life, it's very difficult to draw the trend lines for you to see where actually the market is going. So it's very difficult to use trend lines. Okay, so I prefer to use moving averages. So my strategy, since I've been trading for some time, this is what I also teach all my webinar students. I use moving averages. We use moving average to trade. Okay, so this is 200 moving average, 200. This is 50 moving average, and this is 20 moving average. 200 moving average, 50 moving average, and 20 moving average, and they are all exponential. Okay, but the 200 can be simple moving average. Okay, simple moving average, but the rest are all exponential moving averages. Okay, they are all exponential. So why do you need to draw moving averages on your chart? So that you don't have to worry yourself to think about where to draw the trend lines. So the moving averages are naturally plot on your chart for you. They automatically plot for you, and then you don't need to look for where to connect the dots. Guys, do you understand? You don't need to think of where to connect the dots. So you need moving averages just to make your trading very simple. So plot these moving averages on your charts and listen to what I'm going to say next. Okay, so 200 moving average, 50 moving average, and we have the 20 moving average. These moving averages are just there to tell me the direction of the trend. I've always been saying it. The moving average does not tell me when to buy or when to sell, but they are telling me the direction of the trend. So if the moving averages are in sequence, if the 200 is below, 50 is above, and 20 is above, it means we are on an uptrend. If the 20 moving averages cross the 50 like this and comes down, it means the trend is changing. So I have to be careful. I have to watch out the next trade I'm going to take. So to identify a trending market, you must make sure that all the moving averages are in sync. Okay, you can even use just 2 moving averages, but I just prefer to use these 3 moving averages just on the chart. Okay, but that's not what I look at. I look at them just for the trend. So you must first identify a trend using a trend line or a moving average. Now we have identified our trend. The next rule is what? Identify consolidated area. So identify consolidated, which is support, and then when there is a breakout from support, this was not any serious breakout, so you can't take any trade here. Okay, but I'm just using it for example here. Look here, you can see support, and there was a breakout. Okay, so when there's a breakout from support, what do? You wait for the market to retrace to the zone, and then gives you a pattern. And how do you find this pattern? This is a pattern I traded on Friday. I want to show you. Can you see the MT5 has logged me in? Anytime you take a trade on MT5, you take raw trades. The platform will just give you history. Okay, if you don't have this on your MT5, you can do the settings. Set that any trade you take is pre-recorded. Okay, so this one, the moment it take me out, and then I just took the screenshot to explain to you guys where I took the trade and how I took it, so that you also be able to take the same trade. Okay, so how did I find this trade? After I identified the trending market, I waited for this market to come down the previous day, which was Thursday. I waited, the market did not come. So as a trader, you must be patient. Okay, you must be patient to wait for your strategy to be ready before you take any trade. So on Friday morning, when I woke up, I saw that the market has consolidated a while, and it gave me a bullish engulfing pattern. You can see, well, let me zoom it in so that you can see, well, okay. So the market gave me bullish engulfing pattern. See, this is where I entered the trade. So where the bullish engulfing pattern? See, this candle took over this candle. So this pattern, it looks scary though, but it is a bullish engulfing pattern. Okay, bullish engulfing pattern, the one we learned in one of our videos. So if you have not watched that video, just go back and watch some of the candlestick videos. Okay, candlesticks are the language of the market. You must understand what candlesticks are trying to tell you and how to interpret them. Okay, so this is a bullish engulfing pattern. So I could have taken the trade here, or when I came back, the trade was still here. So I was just waiting for more confirmation, because when I came here at this moment, I wasn't around. I saw the trade and then I think it was somewhere here. I wasn't still sure. I waited, and then when I got another bullish engulfing pattern, I placed my buy order here. Guys, can you see the log? I placed my buy order here. So here is where my buy order was, and my stop loss was somewhere here. Yeah, somewhere here. That's where my stop loss was. But the moving average was here, as at that time it was around this area. So my stop loss was below the moving average, and my take profit was here, which is 1:2 take profit. Okay, 1:2. Always take 1:2. Don't take something less. If you're taking something less, maybe 1:1.5 or 1:2, 1:2.5. Okay, don't also take something too long. Don't follow those guys on Instagram, on YouTube. Just say they take 1:5, 1:15. Guys, forget about them. They are not real traders. Okay, they are not real traders. If you want to learn how to trade for a living, follow my rules and you also become profitable. Okay, so I entered here, my stop loss was here, and I took 1:2. 1:2 means whatever you're risking twice. I don't want to mention how much I make, but I just say for the sake of you guys, let me just mention it here, but don't tell anybody. Okay, so my account is not really big, not also really small. I've been trading for about 5 years now, and I risk around $400. Okay, so this particular trade I made 720. Yeah, 720 on this trade, and then my stop loss was around, I think, 350 or 370. That was my stop loss. It's around $350 or $370. Okay, so this is what I made and this is what I risk, which means if the trade does not go in my favor, I only lose $350 of my account. If the trade moves to my favor, I must make at least twice. That is risk rate of 1:2. Okay, so with a 50% win rate, let's assume that you do this every day and you get 50% win rate. 50% of the time you are wrong, and 50% of the time you are correct. Guys, take your calculators and do the maths. You definitely make money as a profitable trader because you know what you're doing. Okay, that's why risk reward is very, very important. Win rate is important, but risk reward is the most important thing. Okay, because your win rate must correspond with what? Your risk reward. But let's say you are a beginner. Okay, you are a new guy, your account is very small, you have about $500 in your account. How much are you supposed to risk on a trade? What do you hear on YouTube? People say that risk half, okay, risk all. Or guys, if you do that, you blow your account. I'm telling you, follow my instructions, you become profitable. If you have $500 in your account, share it in such a way that at least you can take about 30 trades before the 500 gets finished. That's it. At least if you are taking 30 losing trades until the 500 gets finished, that's what you must risk on a trade. Ideally, you must risk only 1%, 2%, or 3%. Okay, don't risk more than 3% or more than 5% on a single trade. But because your account is very small and you can't build it small, and because you take a very long time before you be able to build your account, that is why you must increase it a little. But because you know what you're doing, okay, increase a little, just that it will boost your income, it will boost your return. Okay, because if you're a new guy, your account is $500, how much can you make? If you're risking 1% of $500, it's very small, right? Or you're risking 2%, it's very small. So at least if your account is small, share it in such a way that you can take about 30 trades before your account will get exhausted. Okay, so let's say that you have $500. How much are you supposed to risk? At least you can risk something like maybe $20 or maybe $50. Oh, actually, it's very hard to write with the mouse. Okay, just forgive me. You can risk like maybe $20 to make what? $40. That's it. Or you can risk $30 to make $60 on a trade. Guys, you understand? So this risk reward, your risk reward must be consistent. You can't change this. If you know this is what you're taking, the same amount around the same figure is what you're supposed to take. Or let's say your account is very big, it's a little big, like maybe you have $1,000 account, so you can raise like $50, right? You can raise $50 to make what? So when you make a winning trade, you make $100. Guys, it's very simple. You can raise $60 to make $100. So assuming you have 50% win rate, take your calculator and do your own calculation. You definitely become a profitable trader. But if you don't follow these particular rules and this particular mechanism, there is no way you become profitable. Okay, so one, you must know when to enter. So when are you supposed to enter? This strategy is what? Breakout continuation pattern, right? So when are you supposed to enter? You search for a trending market, right? Then what else? After trending market, what else do you do for? Look for what? Consolidation area. On this particular chart is gone, but I show you another one. You can see support area here, support, also support at this side. I showed you. This is a zoom in version. I showed you. The way for market to retrace back to the support zone gives you a confirmation pattern. Here, I don't see any confirmation pattern here, so I can't take the trade. I don't see any confirmation pattern here that fit my strategy, so I can't take the trade. So as a patient, as a trader, you must develop the character of what? Patience. You must be very patient. Sit down on your hands, guys. Sit on your hands. Put your hands on your ass. Put your hands on your ass, okay? Sorry for saying that, but put your hands on your ass and sit down and wait for your strategy to be ready before you take a trade. Okay? So I did not see any confirmation here. Here is where I would have taken a trade, but I wasn't that around. So here is where I saw it. This is H1. So the market gave me bullish engulfing pattern. See, this is where I entered the trade. See guys, after I took my profit, see what happened. Have you seen what happened to the market? I entered here, stop loss here, my profit target here. After I took my profit, see the market dropped before the market closed. You see, the market dropped. The market dropped before the market closed after I took my profit. So assuming I was supposed to stay in the trade, I was to stay in the trade. Oh, I want more profit, right? I would have lost. I wouldn't know what will happen next, right? Yes, though sometimes the market will also continue and gives you more profit, but you can't tell. Okay, sometimes the market will almost hit your take profit, like maybe your take profit is here, almost hit and then comes down and stop you out. These are all relatives of trading. Okay, but with all these things, you must have consistent plan. Okay, you must have specific plan, specific way you trade. The market is very random, so you too don't have to be random. If the market is random and you too have to be random, then you limit your odds, right? But if the market is random and you have to become rigid, okay, you must have specific rules, specific entry criteria, specific way to enter, specific way to take your stop loss. That's all, and become profitable trader. Okay, so can you see what happened? You think if you're a beginner trader, you can handle this? The market came all the way down here. You can handle that? Oh, I'm going to wait for it to retreat back. You can't handle it. Okay, you rather end up and remove your stop loss. You keep moving, and the market will draw your account down, and you have empty account. Okay, so guys, don't be doing those things. You must know where to take your stop loss, where to take your take profit. Okay, so I entered here, take profit here. That's all. When it hits, I'm out. I don't care whatever happened to the market again. If the market will go to the sky, rocket to the sky, I don't care. If the market comes down like as it came down, I don't care. That's it. So this is very simple. Okay, so this is a breakout strategy that I just want to show you. So next time you should also analyze the market and see such setup. Okay, you should be able to take it. So analyze the market. First, analyze trending market. Okay, and then when you see consolidation area, you draw a horizontal line and wait for a breakout of that consolidation area. The market will trace back to the zone anywhere around, and you see a bullish engulfing pattern, you take the trade. Okay, and whilst I was talking, you heard me mentioning patience, because if you don't have the patience to wait for the candlestick formation, then you enter a losing trade. Okay, so please always have the patience to wait for candlestick formation. That's what makes you a great trader. Okay, after your strategy is ready, you must have the patience to wait for a confirmation. Sometimes I could have also entered here, right? Sometimes I want discount, so sometimes I just want to wait for the market to come down a little and then I'll enter. Sometimes the market will also go and leave you. So the ideal one is to enter when your strategy is ready. You can enter with ambush techniques, you can enter with candle confirmation or a discount. I also explained this in one of my videos. If you've not watched, can go back and watch them. Okay, these are videos, these are things I teach in my webinars. I just want to start a YouTube channel. My wife has been pressuring me, so I just want to teach you guys here for free. Okay, because some time ago she questioned me, so you are saying that you don't want to get involved with YouTube noise, and what if there is also a guy there who was just like you, who's also struggling? What I like, how are you going to respond to that person? So I decided to also start this YouTube channel just to help any guy who is also struggling out there, just to tell them the raw truth of Forex, how to teach them how to trade Forex, those they will to make some money to feed themselves and their family. Okay, so that'll be all for this particular video, and let's see, maybe I'll show you more of this kind of videos. I think this kind of videos will help you a lot. So if you think this kind of video is going to help you a lot, just comment below and tell me, oh, show more. Just say show more. Okay, show more of this video. Just comment for me to know that you like these entries, and I'll keep on uploading videos so that you also know where to enter and where to edit. Okay, so see you in the next video. Subscribe to the channel. See you next time.